Welcome to another edition of the Pipsoclock webinar. And today we are looking at another very interesting topic. For the last few weeks, we have been looking at the 4 profit pooling forex trading strategies. So we've considered 3 of them already. And today we are looking at the last strategy for this month, which is the news trading strategy. These strategies that we have been looking at are strategies that can help you to change your forex trading games. It gives more exposure into how the market operates or what you should look at when you want to buy or sell an instrument. So today we are looking at another dimension of these strategies, and we are looking at the news trading strategy. I want to get us started quickly, but before that, this webinar is organized by Pipsoclock. I know for you to be in this session today is because you are already a member of Pipsoclock. However, for the benefit of those that might be seeing this video much later, Pipsoclock is a community of forex traders, and what we do is we support our clients, members of our community, with all the resources that they need to become a successful trader. We know that trading can be challenging, so there is need for the required education, knowledge for a client or for a trader to be successful. That is why we organize webinars like this, where we treat different topics and also we share analysis of the market. We publish articles on our website, and we also share analysis and signals also in our Telegram channel. So these are some of the ways that we support members of our community. We also have our forex education program, which are video recorded. We have trainings for new traders, those who are starting afresh or who want to refresh their knowledge of trading. We also have advanced courses and all that. These are available within the member area of the Pipsoclock website. So if you want to access all these resources, you can just log into www.pipsoclock.com. Then you click on login. Of course, you can just log in with your email address. The email address will be any of your emails that you have been receiving information, from us. So, and then you log in with your Pipsoclock password. If you have forgotten your Pipsoclock password, it's very easy to retrieve your password. Just click on the forgot password link, and then you'll follow the process through. So today, we'll get started quickly because I know that we would actually get deep into the practical, and we'll look at actual news that will be coming out this afternoon so that we can apply the knowledge and the skills and actually trade the news. We have our trainer in the house, the person of Mr. Ifeanyi Uche. Mr. Ifeanyi Uche has been in the forex game for more than a decade. If you have been trading for quite a while, I'm sure you might have come across any of his training, or you might have been under his teaching at one point or the other. He's a forex coach, he's a businessman, and he knows the in and out of this forex trading. So today he's here with us, and he will be taking us for the session on news trading strategy. Once again, I welcome you all, and at this point, I'm going to hand over to Mr. Ifeanyi Uche. At the end of this session, there will be time for us to answer questions. So if you have any kind of question, maybe it is related to a session or general questions as a member of our community, please document your question. You can leave a message while the session is going on, and we'll go back and go through all your questions. And also, if you would like to unmute during the Q&A session, please, you can do that, and we'll ensure to answer your questions. Thank you again. Mr. Ifeanyi Uche, you have the floor now. Please unmute and present. Thank you.
Thank you, Rico. Good afternoon, everybody. So I hope you can hear my voice. Please, if you can hear me, just give me a 1 in the chat box. If you can hear me, type a 1 in the chat box, while at the same time, I'm going to share my screen. So if you can hear me, okay, great. Thank you very much. Thank you. All right, so now you are seeing on the screen there, news trading strategy, step-by-step guide for profitable trading. So now we deliberately shifted this to 1 p.m. so that we'll be able to see a typical example of new trading in action by 1:30. So whatever I'm going to present here, I'll rush through it under 15 minutes so that we'll have the next 25 minutes to prepare for the news of the afternoon. So we'll see how you can take it in a couple of ways. We'll just demonstrate with this. So we'll be covering the following. What is news trading? Key aspects of news trading in Forex, how news trading works, and then benefits and risks. Okay, so now under what news trading is, of course, is a strategy of making trades based on the outcomes of economic and political events, news events. You hear news, coming out from different countries, from different political leaders, from different bank chiefs, and so on. Even when it's happening in Nigeria, it can also affect the naira when some events are happening. Even when central bank make decisions, elections, and so on. So the forex market is highly sensitive to such news, and significant announcements can lead to substantial price movements in currency pairs. So we're going to be looking at what it entails. All right, now we're under here, we'll now look at the key aspects of news trading in Forex. One, you'll be looking at economic indicators, political events, and market expectations, because these are the things that you're going to be observing even as you approach news trading. Now, under economic indicators, you are considering interest rate decisions, employment reports. Now, central banks will announce rate changes from time to time, and these things have profound impact on the currency values. For example, now, if a central bank observes that the inflation is getting high, prices of goods and items are rising astronomically, in order to control it, they will want to raise the interest rate. And in raising the interest rates, money will be a bit scarce from people's hands, and thereby forcing demand for goods and services to drop. And such demands will now cause the prices to start coming down. Then employment reports, you have non-farm payrolls first Friday of every month. And then you have in the US, you have what's it called? Employment change, unemployment rates, and so on. This can trigger volatility in market, excuse me. Then you have GDP reports, that's gross domestic products. These figures reflect economic growth of a country. Then you have inflation data. You have consumer price index, producer price index, consumer confidence index, and a whole number of them that central banks monitor. They use it to gauge, the economy, to know when they should become hawkish, dovish, or neutral. All right. Now, you also look at political events like elections and political stability. Sometimes change in government can affect. Can affect a country's currency. We've seen this happen several times. During the U.S. election in 2012, and then during the U.S. elections in 2016, even Nigerian election in 2015. Also, you saw how it affected the stock market. So, political events, political instability can affect a country's economy negatively. Who becomes the leader of the nation can also affect that country's economy until they work towards stabilizing it or otherwise. And then you have political events when there are trade wars. For example, when there's a trade war between China and other Western countries, you see the impact it has on the currencies of these countries. All right, even conflicts. We've seen the impact on the war or the unrest in Far East, how it's affecting the price of gold and other commodities. So all of these things have a way of impacting the markets. So you need to be aware of them and know how to read them. Then market expectations, you have forecasts and estimates, where this is when you now want to check economic calendars, right? Where analysts and economists, they provide forecasts for economic indicators, and then the market will react not just to the actual data, but also to how it compares to these expectations. We're going to look at that shortly in one of the calendars. Then you have surprises and revisions. I'm going to show you this too. Sometimes unexpected results or revisions of previous data can cause sharp market movements. For example, if maybe like, let's say unemployment, okay, let's say CPI for last month was 3.2. And then before the next release for this month, they revised it to 3.1. It can impact on the market even before the new one is released. All right. So then how do you trade news, or how news trading works? There are three things there: preparation, strategizing, and execution. And let's take them one after the other. Under preparation, you need to learn to monitor the economic calendar. You want to keep track of scheduled news releases using economic calendars provided by financial news websites and trading platforms. For example, when you are go on the skilling websites, you can search around, you can find news beats coming from skilling. If you log on to the MT4 platform, go to what's it called now, a section on news. You also can find some news pieces. You also go to the C Trader, you also find some news pieces. So you can actually find these. Then you have what's it called now? Forex Factory, you have Forex, FX Streets, and so on. Okay, then also strategizing. After you have analyzed and seen what's coming, then there's a need for you to now plan. Establish where you want to enter the market and where you want to exit based on the potential outcomes of the news. We're going to look at this. And of course, risk management, you must implement that using proper position size or lot size, stop loss, and take profit orders. Very crucial to managing your risk, because during news releases for major impact news, you have high volatility. Then execution, the immediate reaction and then follow up. There are traders who will execute trades based on the immediate reaction to the news release, leveraging on the initial volatility. I'll show you how you could do this. All right, then there's also the follow-up, where depending on the impact of the news, you may want to adjust your position as the market begins to adjust the time. Sometimes the news comes out, you don't react to it. You check and figure out what is going on before you now you apply your strategy to what's going on. Then benefits and risk of news trading. Let's quickly look at the benefits. You have profit opportunities. Significant price movements can provide lucrative trading opportunities during news releases. And of course, one of the major benefits is that there is a predictable schedule. You can determine when you want to trade. Several years back, when a major mainstay in trading was just news, I'm talking about 2009, 2008, and so on. What I used to do then, because I knew the times, you check the calendar, you see the time. Sometimes some news will come out by 1:30 a.m. Australia. So I have to set my alarm by 1 a.m. I'm awake and I begin to prepare and set up. So as soon as it's 1:30, the news comes out, I pick my trades, 5 minutes, 10 minutes, I'm out. I go back to bed, set again for 8:30 or 9 a.m. Then take it, then work away again, set again for 1:30, and like that. So you know the exact times you want to reschedule your trading, when you are trading news. And then risks involved is that there is high volatility. News events can lead to extreme volatility, and this poses a risk of large losses. Slippages can happen during news releases. Orders may be filled at different prices due to rapid market movement. Yes, this happens a lot, which is why you need strategy. And of course, there is this fast-paced, the fast-paced environment in the market during news releases can lead to emotional trading. It can lead to impulsive trading decisions, and which is not good for you as a trader. So that's why you must prepare, have a solid plan, and then stick to that plan, no matter what happens. Don't say because it hits you on a loss, you want to retaliate. Typically, I think a case in point, many years ago, 2008 precisely again, I created a system I called the 5-minute trader, and I'm going to show you how that is done even here using Straddle. Not many brokers accept it though. But what I used to do, set up the straddle method about 5 minutes before the news event is released, and then my stop loss is usually 5 pips, and the target is left open. So I remember a particular period when I had 10 trades within a week, and of these 10 trades, 7 of them were losses. And of these 7 that were losses were losing 5 pips each, making it a total of 35 pips loss. Now, if I didn't follow through with the plan, there were only 3 wins. And those 3 wins, the list of them was about 40 something pips. Then you have 80 pips, rather 140 pips. So now if I had become emotional with the losses, then everything would have scattered. So that's why there's a need for you to have a plan and stick to plan. So in conclusion on this, news trading requires a good understanding of economic indicators, market expectations, and the ability to act quickly. But with proper risk management, it can be profitable. It can be a profitable trading experience for you. So I'm going to quickly switch this, and let's quickly go to the economic calendar, and there we will quickly prepare for what is about to happen in the next 8 minutes. Okay, so I believe you can see my calendar here. If you can see the calendar, whichever of them here, whether it's Forex Factory or FX Street, just type calendar for me in the chat box. You can see the calendar, just type calendar in the chat box for me. If you can see the calendar, type calendar. Okay, great, thank you. All right, so in 8 minutes time, there's a news event coming up and lined up from the US. You see personal consumption, expenditures, prices, initial jobless claims, which is the major one, weekly event. And here you have the forecast for this. See the previous one, 215,000 initial jobless claims. And the forecast is that it's going to increase, meaning that if this happens at 218K, it's going to impact negatively on the US dollar. That's what 218,000 jobless claims. That means people are filing claims of being jobless. And what this means in the economy, to the economy, is that if more people are filing for claims that they have lost their jobs during the week, it means that one, there won't be pressure to pay taxes. One, so the government will lose on taxes. Two, what do you call it, social benefits will now go to them. They won't be contributing prior, they will be withdrawing. So the economy will lose. So higher figure here means negative impact on the US economy and the US dollar. So if this number comes out as it is, it probably will cause the dollar to depreciate. So if you have Euro USD, you have Euro USD go up. But if the number drops, instead of being as high as this or lower than this, then it will be good for the US dollar. It then means that dollar will appreciate, Euro USD will go down. And then you have GDP coming up here, core personal consumption is coming up here, but the one that has the highest impact is the GDP analyzed. And the forecast figure here is 1.3%. All right. And if the figure is higher than this, it's good for the US economy. So the dollar will appreciate. So we'll be looking at this and this mainly, and all of them are also equally good. So when there are multiple like this, an advanced trader can actually find his way around it. But there's something, let me quickly share a platform so that we can use that to just show you things you can do. For example, now, with you here, you can actually, can you see this platform? Just type MT4 if you can see the platform. Type MT4 if you can see the platform. We don't have time. If you can see the platform, type MT4. Okay, great. Okay, now, so all right, beautiful. So now we're going to use this as to just demonstrate quickly. We have news coming up in 5 minutes, and this is gold or Euro USD. Let me use Euro USD, for example, and I can switch to 5 minutes. One of the ways you can trade this is wait for the event to be released, and then you trade it on retracement. Let the news determine the trend, then you trade it on retracement. Another way is to trade it by straddle. Straddle is an age-long strategy, like as it is now. I just pick the top and the bottom from price. Sometimes it could just be 10 pips away or so. So what I'll just do is I can say, okay, if this breaks above this, I can buy using buy stop, and then use my stop loss, put a stop loss here, and then if it breaks below here, I'll sell using sell stop. So let me just use that, but use a very minimal risk factor there. So you go back there, select pending order, and then use buy stop. So for buy stop, I can just say, just add the 0.825265. Okay, so I'll just say buy stop at 1.08265. And then my stop loss will be below here, which will be somewhere around here. Okay, 1.081. So I'll just, let me say at 1.0800. So I can just say at 800. And then TP, I can just use 20 pips. So I can just take it to 45 or 46. 5. Okay. And then that's for that one. And then you set up a sell stop using the low of this one, 5 pips below this one too. So I'll just take it to be at this place. So now, but this type of order can also lead to slippage if the news is high, such high impact. But for this one, it may not be like that because they are not so super high. For non-farm payroll, it could. So here I can say at 1.08033, 1.08033, and then the stop loss, I can put it somewhere around here too, which is around 1.08. Let me see. Okay, I can just put out 15082. Okay, let's say 082 08200. Okay, then our target, I can just put 20 pips there. 07800. That's one way to go about this. The other way to go about it is I wait. Once the news comes out, the direction it goes, I'll bring in my Fibonacci, and then I'll wait. That means I may have to wait for either 1 minute or 5 minutes, depending on the time frame I choose. So if I choose 5 minutes, I'll wait for 5 minutes. If I choose 1 minute, I'll wait for 1 minute. You can actually scalp it. So I can actually put it on 1 minute and wait. Okay, once the 1 minute candle breaks, usually this can really work so well if it is a very high impact event like interest rate or non-farm payroll, so that, or on that time unemployment rate also comes at the same time. So with that, but then whichever direction it comes out right now, yours is just to follow the trend. All right. So now you are using, if you are using at this point, you may want to even relax your technical indicators, follow the price action at this point. Okay, so it's just less than a minute. It's less than a minute, yes. Let's watch and see what happens now. So as soon as it comes out, we have two different kinds of trades now. Pending order, buy stop and sell stop. So where if it triggers one, we continue, but we are still going to take another one. So, but before we go to that, I will check as soon as it moves. These ones I've set, the pending orders I've set here, and I'm not following any trend. It's just whichever direction it goes, there you go. Okay. Then I can also open a what do you call it now, trailing stop on them if I want to. But as soon as it's 1:30 our local time right now, what I'll just do is to check the economic calendar and know the numbers, whether we should follow that trend or whether the direction is going is a fluke. We'll just watch now. So I'm going to switch. So you can be checking your own this thing. Now you can see it has moved now up this way now. So let's now check. Let me now go back and open a calendar. Let's open the calendar and check what is happening there. Then we can come back. So you can see the news doesn't favor the US dollar. 219K. You can see that it's red. So 219K means it didn't favor the dollar. Every other thing is stable. So you can see it's the same value here, the same value here. The only one that changed mainly here is the what's it called now, the unemployment claim. So dollar is not good for him. So we want to go back and check the impact. So that means that Euro USD and the other dollar pairs where dollar is the counter currency should go up. You can see that now. You can see that it went up, but it hasn't gone up to now. I can also wait now based on this. I can wait on this now. I can actually use Fibonacci to also pick a trade here with this on one minute. You get it? So based on this, now I can say, okay, I can enter at this point at 38 retracement. Here is it. So I can buy. You get it? So I'll put my stop loss. Let me just quickly put stop loss. I can put it at 100. And then I just put this one at 40. I buy. All right. So then this one is just based on the news I've just seen, because the impact is positive for the negative for dollar rather, and you can see what it gave me based on that push. So I entered on the retracement based on the 1 minute time frame that I entered. So that allowed me, because I'm on 1 minute, so that allowed me to enter in earlier. So as it is now, the one that I have opened here, I may not need it again. All right, I may not need it again. This one was if the market has moved so swiftly, not giving me chance to enter. So I can actually delete that one. All right, if it will be too much for me, so I can just move it. Let me move it. Okay, good. I can delete this one. All right, so and then let only this one run. You get it? So that's how news is traded. I've just given you two scenarios. There may not that way, but you keep studying and keep practicing and keep studying too. Now, when you go to Forex Factory, even on the same, what's it called now? On the same FX Street, if you click on this, it should give you some information you can study. All right? You can read some information that you can study about this event. But if you go on Forex Factory will just give you a bit of better clue. Look at unemployment claims, for example, here now. You see it there, and it just tells you the effect, usual effect. If actual is less than forecast, it's good for currency. But in this case, actual is worse than forecast, which is why Euro USD had to go up, and then we have to take a buy. All right, so that is how you can profit from news. More on this, I believe that in the coming days, you can even go deeper and begin to maybe take some events more and go deeper to reading and studying news events to help us begin to position ourselves better for news. There are sometimes it won't show up on the calendar. Where do you go for such? You can also check on Bloomberg.com. You can check on Bloomberg.com. All right. Sorry, Bloomberg. I entered there. Bloomberg.com. Okay. Okay. Then there's also RTTnews.com. RTTnews.com. All right. So these are places that you can actually get news updates on what's going on. So from here, you can see things that are not on the economic calendar that can actually impact the market. So that when some things can happen, boom, and you are checking the calendar, there's no news. Meanwhile, something has happened that has been on some site. So from there, you'll be able to know whether you should follow it or whether you should not follow it. All right. So that is a bit of how to trade news profitably. I'm going to leave the floor open for any questions and clarifications. Thank you very much for coming on board and for paying attention, and God bless you. Enjoy your profit. Leko.
Thank you, Mr. Ifeanyi, for taking us through. No, does anyone have any question? Do you have a question? Okay, Mr. Emmanuel, you said, I didn't really get the FIB. Is that what you said? Okay, the Fibonacci, is that what you mean? Okay.
Okay. Yeah, what I explained there, remember, let me see, hold on. What I explained there is that you can trade the news on breakout, which is why I use straddle, opening, buy stop, and sell stop. That one, I don't need Fibonacci retracement. You can also trade it on retracement without you rushing into the market. You know that for that one now, like the one I set up first, depending on that buy stop and sell stop, I don't need to check the outcome of the events first. All I just need is to wait for the event to come out and the market swings in one direction and picks my trade, okay, before I go to check whether the direction it picked the trade is right or not. But the other option is to wait for the news to come out so that you don't rush in. You know, you'll be sure of what the trend is saying based on that news. That's where you use Fibonacci retracement. Now, and I said, I don't want it to be late for me. So I have to use the lowest time frame, which is 1 minute. So I had to open 1 minute time frame and I wait for the news to come out. So as soon as let my screen load. Okay, good. As soon as the news was released, the very first candle, this is 1 minute candle that opened, gave me the trend. And I checked the calendar, the news information favored the direction it went. If he had gone the other way, I would hold on because it will be confusing. But I saw the one that actually was going to move the market. So as soon as I saw that, okay, good, and the market price went in that direction, favoring that trend. So what I just needed was, where can I now enter? So I had to now draw the Fibonacci from the top of that one to the low of it. And I found a support at 38.2 retracement. So I began to prepare to enter at that point. So that was how I placed my entry based on Fibonacci from the top of this 1 minute candle to the low of it. I want to believe it's understood. If not, please just let me know.
There's another question on news trading as analyzed. What is the best time frame to use?
Like I just explained, if you want to use breakout to trade, you don't care about what time frame it is. You just, okay, well, the lower the time frame because it's news. But then if you want to use, because when it's about to come and the market is a bit quiet, you can quickly draw your inferences, draw your support and resistance lines, and then form where you want to make your entry. But I think that for me, it's better to trade on the lower time frames. All right, that way. But then some others would not bother on time frame. You just wait for the news to come out and then you decide your entry. Okay. But for me to trade on retracements, my preference is the lowest time frame so that I won't have to wait for long. For example, now let's look at it. Let me switch to 5 minutes. You see this. This is 1 minute, and it allowed me enter so close here. If I had waited for 5 minutes to elapse, just hold it. If I had waited for 5 minutes to elapse, this is probably what did I open at 5 minutes, right? And this is probably where I would have waited until this closed. You get it? Before I will now enter on this one. You see that? So if I waited for these 5 minutes to close from it now, and I'll draw my Fibonacci retracement, I will still be waiting. I'll still be waiting. But where it is now, okay, I can decide to take these 5 pips. It's a scalp, and I'm out. All right. But if you have to be on a higher time frame, you may have to wait a little longer if you are waiting for the thing to check. So that's why oftentimes the lower time frame is better for high impact news events.
Thank you, sir. I want to believe that answers the question. Mr. Larry, are you satisfied with the response? Is there another question? Okay, good. Thank you for your confirmation. And we'll go on quickly to the final aspect of this webinar. Our recommended broker is Skilling. Skilling is the broker we are using for our trades. And everyone here, I'm sure you have a Skilling trading account. You can log into skilling.com. Or if you don't have an account yet, you can open a new account, or you can go to pipsoclock.com/broker/skilling. If you need any help, with your Skilling account, or if you want to reach us for anything, you can always send us an email, help@pipsoclock.com, or you use our phone number 02013306030, or you can message us on WhatsApp on 08058146723 as displayed on the screen. We're always available to assist with any kind of challenge you might experience with your trading or with skilling. Why skilling? Why are we recommending skilling? Skilling first is a regulated broker. They have a very good trading conditions, and there are a lot of instruments, over now 900 of them that you can trade on skilling. The spreads are competitive and the user experience is top notch. You can trade on MT4. MT5 is currently in development. You can also trade on CTrader if you are familiar with the CTrader platform. So with skilling, you can trade on CTrader. For clients that have not made their first deposit, if you have not made your first deposit with skilling, there's $30 waiting for you. By the way, why haven't you made your first deposit? How are you trading? Come and trade with skilling. There's $30 welcome bonus for you. If you make your first deposit of $25, we'll give you an additional $30. And you can withdraw your profit. You can trade with the bonus. You can withdraw your profit. And that's it. It's a very good bonus to increase your capital and to also take advantage of your winning trades. And for clients that are able to deposit $50 and $100, you have a 100% exclusive bonus. And this bonus is exclusive to Pipsoclock members. You won't find it anywhere else on the skilling website. At this time, this bonus is designed for the members of Pipsoclock. You can take advantage of it, make a deposit of any amount between $50 and $100, and you get a $100 bonus. You need to get this bonus and experience how it is. There are a lot of things to enjoy. Okay. There's a 0-0 campaign. Last week was the NZD USD. This week, if you go to your trading platform on skilling, you would see as part of the symbols that are listed, you will see the 0-0 campaign. So every week, there's an instrument that is traded without commission and without any markup. For this week is NASDAQ. If you are trading NASDAQ this week, there are no commissions that will be charged and no markup. So if you go to your trading platform, go to the list of symbols, then you will see the 0-0 campaign and category. You see the 0-0 campaign category, and then whatever instrument is listed under it is the instrument for the week that you can trade with no commission and no markup. So you can take advantage of that. Always look out for that. Skilling will send an email to all clients every week to let you know what the instrument is. And if you do not receive that email, just check on your MT4 platform. You're going to see what that instrument is. So it's something good that you can take advantage of. If you are not on our Telegram channel, I need you to join now, t.me/Pipsoclock. You need to be on our Telegram channel as an avenue for you to get quick updates about what we are doing. Then that's where you also receive free signals. You receive free signals, and then the signals has been performing well. So you can join. If you don't have the time to always check your charts, you can get the signal just on your phone, set it up with your TPSL, proper risk management, and let it run. And if there's any update on it, you would also get the information, and then you can quickly change things. So set it up, join our Pipsoclock Telegram channel. This is the link. Turn on the notifications. We don't disturb you with messages that are not important. Only important messages, the signals, other important information. So it's just a group to be on. Please join us on that Telegram channel. So we've gotten to the end of this session today. And this month we've done the webinar for every Thursday this month. We are going to continue with another series in the month of June. Please be on the lookout for our information. We'll either send you an email, an SMS, or leave a message for you on Pipsoclock and sometimes on WhatsApp. So please stay close, and then you can always take advantage of the resources within the Pipsoclock member area. Just go to pipsoclock.com, click on login with your email address and your Pipsoclock password, and then you can take advantage of all the resources that are there. If there's anything you want us to improve on or anything you want us to come up with, you can always send us an email, help@pipsoclock.com. Once again, I want to appreciate every one of you for taking the time to join us for this session, for this webinar. I hope you enjoyed it. If you like what we are doing, please invite your trader friends, tell them to register on pipsoclock.com. That's the way to get access to this information. Let them join, let them register, and then we'll keep in touch with them and update them with all the things that are happening within our community and offers and, things that you can take advantage of to improve your trading skills and all that. Thank you, Mr. Ifeanyi, for the session. Thank you for sharing that knowledge with us. I hope that you have learned something. You can always go back to watch our recordings. We'll put it in the member area. And that will be all for today. Thank you, Mr. Andrews, for joining us, Mr. Emmanuel, Mr. Basi Okon. Thank you, Mr. Victor. Thank you, Mr. Larry. Thank you, Mrs. Bumi Adams. Thank you. That will be the end of our session today. Do enjoy the rest of your day, the rest of your evening. Bye-bye for now.